Hey, what's going on? It's Chase here at Everbullish, the stock Sherpa on YouTube. It's Friday, the market's closed, rocking out to a little bit of Zeppelin. Hot take, Zeppelin is better than the Beatles, by far, best rock band of all time. And that song I was just playing, That's the Way, another hot take. Another controversial take, I think that That's the Way is their best song. Even better than Stairway, even better than Going California, fight me on that. Anyway, trying to add some music and some opinions to see if I can grab some more viewers and keep this interesting even outside of stocks, because for most people stocks aren't as interesting as they are to me. So anyway, hope everybody's well. Friday, markets closed for Good Friday. It is April 2nd, and it's a beautiful day in the hill country here, even though I got a little bit of puffy eye allergies going on. So let's get started. What I'm going to talk about today is fund managers. I'm going to actually do a profile. So just saw a deal on Instagram that popped up and said that Danoff, who is one of my favorite fund managers of all time, probably the best fund manager of all time, up there with Peter Lynch, up there with the Growth Fund of America guy, up there with Templeton, Sir John Templeton, a lot of those fellows. But I want to talk about him because he has a really cool approach. He's somewhat the successor to Peter Lynch, and he just had his 30-year anniversary as the manager of the Fidelity Contrafund. So just to get to it, Bill Danoff, he's a New England guy. He went to Harvard. He started on at Fidelity, quickly became a fund manager back in 1990. Since 1990, he has been managing the Contrafund solo. It is I believe it's the third largest mutual fund in the world, and it's the largest actively managed mutual fund. It fights back and forth with the Growth Fund of America by the Capital Group, which is also a famous and fantastic fund. I like to use them both in concert with each other. The Contrafund is actually one of the portfolios that is in one of the only mutual funds that I put in any of my premium portfolios available on my website. And it's actually the largest holding, I believe. Yeah, it is the largest holding right now in the Everbullish balanced portfolio that's beating the pants off the market. So anyway, let's go a little bit more about Danoff. I saw him speak one time in my investing career multiple years ago. But anywho, he one of the coolest things he said is he just said, "Buy American, get back to work. I'm gonna go to work every day. You should too." Thought that was really cool. He is all about American companies, so he doesn't have that exposure to the currency risk, commodity risk, governmental risk, legislative risk that you have in international investing so much. His performance speaks for himself. I'm reading off of Wikipedia right now, and it's saying that I knew this. I used to quote this. It's been a while, so forgive me, but 1 year, 5 year, 1 year, 2 year, 5 year, 10 year, 15-year life of the fund have all beat the S&P 500, and this is only as of 2019. So his fund has beat the average investor out there. His fund has beat the pants off of the largest fund in the world, which is the Vanguard SP fund. I think it's proof that superior stock picking works. I can only imagine what somebody with this stock picking skill has when they're not managing a fund. So for the longest time, that was my goal, and now I've changed that goal. And one of the big reasons, out of many multiple reasons, is that the ability to steer the Titanic is something that we all could say is hard to do. You have this gigantic barge out there on the heels of the Suez Canal talk. So his fund is 139 billion right now. When you have over $1 billion a month, probably a week, coming in and coming out to satisfy redemptions for your clients, for contributions from 401k groups and others, all the trade reconciliation, everything they have to do, and then also sticking to their stock style as what they're registered is with the SEC. So let's call it large cap, mega cap, or technology stocks in this case. Growth stocks, I should say. It's almost impossible to continue to beat the market like that. That's why I believe in newsletter investing. Hold 20 to 25 positions, watch them and change them when you need to, versus hoping that a large pension fund doesn't have to make a big redemption that month that you're buying into it, and you get an inferior price. So, anywho, Bill Danoff's a stud. He's been crushing it. FCNTX is the no load version. You can buy that on any platform. Don't buy it from an Edward Jones guy. That money goes straight into their pocket. They typically charge a fee on the front end of 1 to 5%, which is called a loaded fund. So does your financial advisor if they work for most insurance companies as well. The class that you should be buying of this would be the Z share or the retail class. If you have over 100 grand, you can buy the investor class. It'll knock down the expense ratio to, I think it's 0.5%. Either way, NTX, Bill Danoff, Harvard guy, Fidelity guy, completely smacked the market, believes in top-down investing. So let's look at what the video games the kids are playing, what the wife is buying at the grocery store. Let's look at the product first, the company second. So that's considered top-down, and that's very kind of a cool homage to Peter Lynch, who he is kind of considered the successor of. That's also my investing philosophy. That's how I like to do it, at least. Bottom up, for your knowledge, would be if you ran a screener using technology or mathematics or whatever and said, hey, they have a good PEG ratio, it's very high. They have a PE ratio that's very low. They have a dividend payout ratio. They have blank amount of investor or insider holdings. There's all, thousands and thousands of F words, fundamentals, that you can use to screen down your stocks and then figure out which ones you want to look at and then look at what their product is. I don't think there's any fun in that, and we're not going to be good at this if we don't enjoy it. I'm a top-down guy. I'm a Peter Lynch guy. First book I ever read on investing when I was 14 or 15 was One Up on Wall Street. I recommend that to anybody. Very cool, very readable book about Peter Lynch, who was the man that did it before Bill Danoff, and now Bill Danoff is holding and carrying the torch and doing it pretty well. So we learned about top-down investing. We learned about what mutual funds not to buy, hopefully. We learned about the ones that are doing very well and the ones that are titanic proportions, but is nimble or more nimble than just index investing or buying, less renowned or capable mutual funds in this case. It's a large cap, mega cap growth fund. In my case, I'm pretty excited because this is the benchmark that I strive to beat right now. The Everbullish 1 portfolio, which is the all-stock portfolio designed to hopefully outperform the Contrafund. It is beating it by over 500 basis points as of the beginning of March. Now that we're in April, I should be able to have new results out. But this is what I manage my performance for hold growth investors, for all stock investors, and I'm happy to say I'm beating my guy. Hopefully I can keep doing it by the end of the year. But Bill Danoff, thank you for all you do. Chase at Everbullish, the stock Sherpa on YouTube, and everbullish.com investing newsletter. You can also purchase premium portfolios, merchandise, and then use the free database to find a little bit more about my trading strategy. So thank you for watching. Hope everybody has a great Easter, and let's get rich.